For chapter 8 sources of business finance, in the sixth video today we will be discussing few more sources of business finance. The first one being public deposit. Business organizations or companies can raise funds from the public directly, and this is known as public deposits. Generally it is a medium source of funds. Okay, it can be raised up to for a period of up to 3 years. Okay, and the rate of interest on public deposits is generally higher than the interest offered by bank deposits. That's why the public will be attracted. Otherwise you will find that banks are more secure institutions where deposits can be kept. So those who are concerned with security, they will prefer banks. So in order to attract the public to deposit their funds in with the company, you have to offer a higher rate of interest. The company or the organization in return issues a deposit receipts as an acknowledgement of debt when the public is depositing money. Public deposits take care of both medium and short term. It is not taking care of the long term source, because for a maximum duration it is 3 years. Okay, so companies generally invite public deposits for a period up to 3 years. RBI have allowed them that much duration only to accept deposits. Okay, so public deposits are a source of medium and short term financial requirements, and the acceptance of public deposit is regulated by Reserve Bank of India. These deposits do not carry any charge over the assets. Okay, second one, commercial paper. Through commercial paper, companies can arrange large funds for a short duration. Okay, so commercial paper is a source of short term finance. Unsecured promissory note, okay, where the company is promising to pay the amount within the short periods which varies from 90 days to 364 days, less than 1 year. Okay, 3 months to 1 year we can say. So unsecured, it doesn't carry any charge over the assets, and it is a source of short term finance. It's a very popular source. Okay, and since it is unsecured, companies with good reputation are only able to arrange funds through this. Okay, it is issued by one firm to another business firms, generally insurance companies, pension funds, or financial institutions like bank, commercial bank, or other banks. Okay, the amount raised by commercial paper is generally large since it is unsecured. Okay, the firms having good credit ratings can issue commercial paper. Otherwise, if they are without any good reputation, if they are issuing, it may not be successful. And again, it comes under the regulations of Reserve Bank of India. Okay, RBI, central bank. Then comes commercial paper, commercial banks, sorry, like Punjab National Bank, SBI. Earlier these banks were not allowed to issue large loans to companies and all, but nowadays with the economy growing and for larger needs of funds, and since the banks are also growing into a very large financial powerhouses, certain policy changes are there, so they are also providing loans, large loans for a longer period. Okay, that's gradually they are changing. Otherwise the banks extend loans to the firms, okay, in the form of generally cash, credit, overdraft, terms loan, by purchasing and discounting of bills and issue of letter of credit. Commercial banks. Okay, the rate of interest charged by the bank depends upon various factors, generally the RBI's monetary policy. Okay, where the RBI decides the rate, and on that the banks add their expenses and all, and charge a little higher rate of interest. Okay, so the rate depends upon various factors, including the level of interest rate in the economy, which is fixed by the RBI. The loans can be repaid in lump sum or installment. Okay, now the banks have started extending loans for longer period. Earlier they were not allowing. Now next one is financial institutions. Financial institutions refers to those organizations which were set up mainly with the purpose of financing the businesses for medium term and long term. Examples can be ICICI Bank, ICICI, it's not bank, okay, IDBI. So IDBI and IDBI Bank are different. ICICI and ICICI Bank are different, okay. So government have established a number of financial institutions all over the country to provide finance to business organizations, set up by both central and state governments. They provide both owner owned capital and loan capital, borrowed capital for long as well as medium term requirements. Own capital as well as long term loans, medium requirements. Mainly they provide loan capital, okay, borrowed capital. And mainly these institutions were like ICICI, IDBI, SIDBI were set up to promote industries. They are also known as development banks in our country, okay. Just go through the points of commercial bank. Like many financial institutions in India have grown stronger, and they had even started their own banks, or they got license to start banks. Like ICICI Bank started by ICICI, IDBI Bank started by IDBI. Okay,